get you some corporate conversations now. Rishabh Instruments reported a good set of second quarter numbers. The company reported strong revenue growth and even EBITDA margins expanded on a year-on-year basis, but they remain flat on a sequential basis. To discuss this and the business outlook going forward, Narendra Goliya, the chairman and managing director of Rishabh Instruments, is joining us on the show. Mr. Goliya, good afternoon. Thank you so much for joining us on CNBC TV18. I'd like to start off with your guidance that you have given for FY24, which is 20 to 25% revenue growth and 18% EBITDA margins. Do you stick to that, or has there been any revision to the guidance?
No, we stick to it. First half year has been very good, as you rightly said in the introduction. But we don't want to increase the guidance. Let's wait and watch quarter 3, quarter 4. Maybe at the end of quarter 3, we'll give you some better information. But 25% is sure, from H1 to H1, the EBITDA is increased by 50% and turnover is increased by 35% as a group. And therefore, obviously, the year end will be better than what we have guided you. But let's wait and watch.
Okay, so you are waiting for how quarter 3 and quarter 4 pan out as well. Mr. Goliya, I wanted to understand how demand has been in quarter 3. We spoke to you last in October. That's when you indicated quarter 2 will be similar to quarter 1. We are almost into 2 months for quarter 3 now. What are the demand indications in different geographies, especially something like in Asia, where you did see a quarter-on-quarter decline, and Europe as well, because that's also a big market for you?
No, at the moment, demand is very good. I would say what we are seeing is even better than what we have seen in the first half of the year. So we don't see any flattening out. But yes, the war continues, the Middle East. So many factors are there, extraneous. If they have an effect, we'll have to wait and watch. But otherwise, it seems to be good, yeah.
Mr. Goliya, your ESOPs cost for the first half of this year was around 16 crore rupees. The last time you spoke to us, you said that this is here to stay for some time. Can you give us a specific timeline as to for how many quarters this is likely to continue? And is there any addition that you expect in the second half of the year?
No, there is no addition we expect in the second half of the year. This current financial year, it will remain what it is. Next year, it is going to taper down, and in 3 years, it will vanish. So it is a tapering off year by year. But during the 4 quarters of the year, it is nearly constant. Yeah, the ESOP point.
Okay, all right. Yes. So this is something that you spoke about in the interview that we had spoken to you about during the IPO as well. So ESOP cost is something that we are tracking closely as well, because it is impacting the financials right now. I wanted to understand in Europe yet again, because, it is the highest contributor to your revenues. You spoke about some of the volatilities that continue in that market. There were some price revisions that you spoke about earlier. One, give us a sense of how Europe will grow going forward. In the second half, what is the expectation? Second, were there any price revisions on the back of gas prices or general raw material pricing? How is the capacity utilization there?
Yeah, so 3 to 4% price revisions have been there in Europe. The war continues, but because we are in such a segment, the demand is very strong. So we don't see any weakening of the sales in the third quarter vis-a-vis the second quarter. But last year also, third quarter was good. So to that extent, the growth may not be similar, if you understand what I'm saying. That vis-a-vis second quarter, third quarter last year was very good. So keep up that growth on the third quarter of last year. Maybe a slight challenge. So maybe percentages would have to slightly come down. That's why I keep my forecast at 25%. And I think that we will reach. And your third question was the demand in Europe. The demand in Europe, especially for our items, both aluminium as well as electrical electronics. We are in the high-end field. We have done some very, very good projects for some of our customers. So we don't see either in aluminium or in electronics any kind of weakening of the demand in Europe, in spite of what is happening in Europe.
One final question from my end, Mr. Goliya. You had last mentioned about an inorganic growth opportunity that you're pursuing. Is there any update to that you'd want to share with us?
I can't share the results because it's not yet signed on the dotted line, but let me say it is progressing as planned, as scheduled. All the work is going on, due diligences are going on. and let us hope we can come back to the market and tell them that it is over. But it's on track. Let me put it like that.
Okay, so it's on track. So then give us some questions which would not be so direct. What is the kitty that you've set aside for this? Is it a target in India or is it global? And by when do you expect it to be completed? By FY24, or will it be spilled onto calendar year 2024?
It should happen in the year 23-24. That means by the end of March, we should be able to do it. The geography is in India, and the kitty would be in the range of about 100 crores.
Okay, all right, Mr. Goliya, take your point. Thank you so much for joining us. We'll speak to you yet again when there is some finalization there and there's some more updates coming in there as well. Okay.
Absolutely. And Rishabh Instruments, they're talking about an acquisition that they're likely to complete by the end of the current financial year. Pull up the stock as well. The stock is doing well for itself today. It's up 1.5%. But let's move on to our segment, Mid-Cap Spotlight.